Time for this week's market segment now, and we've got Iowa State University ag economist Dr. Chad Hart in the chair today. Lots to talk about with the current growing season, trade issues, host of other things too. Chad, starting off, haven't talked to you since the pandemic started, but we had a story on last week's show speaking with Jay Rimpey of Nebraska Farm Bureau, and he has a study coming out that estimates as much as $3.7 billion in losses for the Nebraska ag industry due to COVID. What are you guys seeing in Iowa?
Well, we did an early study of it back in April when it was really breaking out here, and we had estimates as high as $6 billion in terms of the impact to the Iowa economy. Now, since that time, we've seen livestock prices bounce back a bit, but the idea is, you're talking multiple billions of dollars worth of damage to various states' economies, especially within agriculture.
Okay, now let's look at some current market conditions. And first day of summer last week, and we've been feeling the heat in many spots, had some storms move through some of our main crop growing areas too. How has the market been reacting to everything?
Well, I think on the weather side, what folks are mainly keying on is the planting progress that we had early, and now basically I'll call it the crop conditions. So they're staring at that, crop progress report. And you're right that, we've got some areas where we've been pretty dry. We've got other areas where we've got, extreme wetness and some flooding going on. But when we look on average across the nation, this crop is looking a little better than usual at this stage of the game. And so the markets have been holding prices down, on fears that we're looking at another set of bumper crops coming this fall.
Looking at corn demand and ethanol production, COVID cases on the rise in some spots throughout the country, and that says to me maybe folks might have some fears about getting back out on the roads again, as was the case a couple months back. What kind of pressure does that put on corn?
It definitely puts pressure on corn. And if you think about it, back, say, 6 weeks ago especially, we saw those ethanol plants shut down. We saw, tremendous drying up of corn demand here internally in the U.S. Since then, we have seen some of those ethanol plants rebound a bit. We're back up to about, I'd say, 75% capacity utilization within the industry. And so as long as we continue to see, the economy's building back up again, we're not getting back to where we were pre-COVID, but at least we're better than we were in the depths of the shutdowns and slowdowns. As long as we can hold on to that, we will churn through some corn, but just not quite at the pace that we expected to at the first of the year.
And how's soybean demand?
Soybean demand, the biggest key here will be the export markets. I think in terms of domestic crush, we have seen that demand pick up a bit, especially if you can think of it this way. As the ethanol industry shut down, that also meant not only a drop in ethanol production, but it dropped distillers' grains production a tremendous amount. Well, you got to feed those animals something, and so we have seen a pickup in direct corn demand for feed, but also soybean meal demand. So crush demand's been very strong. It's been the export side that's been lagging, and it's the one that the market is really watching, especially when it comes to China.
And that leads right into my next question regarding China, because the U.S. has been having some meetings with Chinese officials, and a big topic is trade. And we've been seeing lots of questions from people wondering if China is going to be fulfilling their Phase 1 trade agreement. So what do you think?
When we signed this deal with China, it was a target across all of agriculture. And I'd say what we've seen thus far with China is that they are buying more agricultural products, but not at the pace to meet that Phase 1 target. So like right now, when you look at the export sales report from this past week, Chinese sales, or Chinese purchases of soybeans are up roughly 10% compared to a year ago. We're seeing them on the pork side. They're up about 90% compared to a year ago. And even in corn, in a market that China is not known to be actively involved in over the past decade, we have seen China step in and actually triple the amount of corn they purchased this year versus what they did last year.
And with everything that we know right now, what would you suggest that one does with old crop and new crop?
Okay, so new crop, I'm going to preach patience. Right now, the idea is that, especially on the crop side, we haven't seen, if you will, a COVID bounce back yet like we've seen on the livestock side. So it makes sense if you haven't marketed a new crop yet, let's not rush into anything. Old crop, though, I think we're facing that challenge. If, and especially in this case, as we talked about, crop conditions are looking fairly good, that's meaning we're probably looking at another set of large crops coming along. We need to get our storage facilities ready to handle this new crop. And when it comes to a choice of which crop do I want to have in storage, say next spring, I'm going to tell you it's the 2020 crop, not the 2019 crop. Because we know the 2019 crop was challenged from the get-go, planted late, matured late, harvested late, higher moisture, more problematic in terms of for long-term storage. So I think on the old crop side, we are facing crunch time. We may have to move some crop just to clear space to make sure we've got the room to handle what looks to be a really good 2020 crop.
And Chad, quarterly stocks report on deck for next Tuesday. What are you going to be looking for with this?
Well, I think what we'll be watching, especially on the corn side, is how quick does that recovery on the ethanol side start to eat away at those corn stocks as we're looking here? Because I think that's the biggest number that scares everybody when we're looking forward to this fall, is thinking about the 2020-2021 ending stock number, which right now, if you take USDA's numbers at face value as for in terms of production, we're looking at the potential of a 3.3 billion bushel carryover coming out of the 2020 crop.
And finally, Chad, if there's any marketing or risk management advice that you'd like to leave us with today, the floor is yours.
Well, like I say, in this case, I think now's the perfect time to really sit down and think about what we've got in storage right now. You know, it used to be the old adage that you wanted that storage cleared out by the 4th of July. And to tell you the truth, I think that's still the case, especially as we're looking forward this year. Because I don't want to jeopardize the crop that's growing out in the field by waiting too long on the crop that's already sitting in the bin.
Next week, we'll be joined by Darren Newsom. And if you have a question you'd like for me to ask him, email us or get in touch on social media, and I'll pass your question along. Before we move on from markets today, I also wanted to get in a quick word about cattle with University of Missouri ag economist Dr. Scott Brown. And with us being in the thick of summer grilling season, Scott shares with us where beef demand is and where it needs to be.
Number one, I think the demand hasn't been bad for beef generally. I sometimes say a lot of the upper end beef products tend to be those higher income earners, and I think they've frankly been less affected by COVID-19 than maybe other lower levels of income earners that we see in the country. So I think it's been relatively positive. I think as food service opens, it probably is a bigger boost on the beef side than maybe some of the other markets as we see folks going out. I mean, I always say if you're going to go out and really have a really good dinner, what do you get? And it's beef is normally what folks will answer. So I think there are some good demand signs there. I most worry again about the drag on the economy as we go through the latter part of 2020. It's really too early to know. Again, as we saw some of those jobs numbers, which maybe had some issues in terms of what was counted, not what was not counted in terms of job numbers, at least maybe more of a V recovery might be in the offing if we don't have a second wave, and I think that's helpful to beef demand.